All right, let's just do a quick audio check. Let me know if you can hear me okay. Testing 1, 2, 3. Testing 1, 2, 3. Okay, great. Audio is good. All right, we'll get started here in about a minute. All right, good morning, everybody, and welcome to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com, and it's great to have everybody here once again this Friday. All right, let me go through a few administrational items like I normally do, and before we get started here, hopefully you can hear me okay. I think I did an audio check earlier that things I think were okay on that end, so we should be good to go. And just as a reminder, go ahead and type in any symbols, stock symbols or ETF symbols you'd like me to look up in the comments area. Do those in caps for me, okay? It makes it easier to see. Okay, let's go ahead and get a few administrational items out of the way. First thing I have to talk about are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand, but we do want you to be aware of the risks. We deal in a realm of probabilities when we trade the financial markets. Sometimes we win, sometimes we lose, but you want to have an edge where you're winning more often. And then, of course, with the losing trades, you want to keep those as small as possible while letting your winning trades win as long as possible. So that's the key in trading, but you're not going to win every trade. So you have to have a good risk control program. We can help you with that. We specialize in that, and I've written several books on the topic. Also, too, check with your financial advisor or money manager to be sure any of the trades we recommend or talk about today are suitable for you. We don't know your personal situation. They do. A lot of factors go into figuring out whether a trade is suitable for you or not. And then finally, please trade with money you can afford to risk, called risk capital. That's really important. All right, here are my books I've written. The two on money management are up there that you may be interested in if you're having trouble keeping those losing trades small or knowing how to calculate trade size. Those are great books for that. My new book, The Art of Trading, second edition, all right, is coming out, should be coming out pretty soon. We're putting the final touches on it. It's going to be, I think, the best book I've ever written. A lot of new information in that book. Since our first book came out in 2008 called The Art of Trading. So this is a second edition of that. And we're going to have a lot of information on our software as well as current market conditions and what we find is working and not working. All right, the ultimate trading system is a trading system called the Applied Reality Trading System with the OWL, PTF, TLM, and ERI scanners and risk control software. You can learn more about that on our website. If you're watching the recording, I'll put some links below that will take you to some videos on how that works. You'll see that being used on the charts we analyzed today. All right, and then finally, please give us a like, subscribe, and share us. Do that right now on the likes. Give us a like. We're trying to build those likes so we get more participation here. All right, so give us a good like on that. Bring your friends, of course, and the whole 9 yards. Okay, so let's come out of here and go into some charts. I want to start off first by just going over what you're looking at here. This is our software on 3 different charts. And so notice here we got a chart down here on the left-hand side. This is our 60-minute chart. And this is what we look at in terms of giving us a short time view of the market we're looking at. And this happens to be the ETF USO. And notice that's loaded on all 3 charts. Then we have the daily chart in the center, kind of gives us a good look at the intermediate trend, and the weekly chart for the long-term trend. So we cover the short-term, intermediate, and long-term. Then we have our software interlaced or loaded into the charts, and you can see that. We have pyramid trading points giving us entries, exits, and risk control. We've got also the OWL, the PTF, and some indicators at the bottom we use to verify and confirm signals that we take in the ART system with the pyramids. And then at the top, we have our scanners running. We're probably not going to use those today because I'm going to be looking at specific stocks you give me, but the scanners are absolutely vital because we run them at all times, and that's basically how we find our stock opportunities in some of our major subscriptions like the More Report and so forth. We're happen to be using NinjaTrader platform today. And so our software works inside that using data from there. Okay, so a couple things on USO. I want to go over USO first. And this is the ETF for crude oil. Now, we are bullish on USO, but we are getting a pullback right now on it. And notice here, if we go to the 60-minute chart, you can see that pullback here. And we've drawn a fib retracement line, which is a form of technical analysis that really kind of gives us an indication of where profit taking should end. So we've been in a profit taking situation, and it's kind of entering that target zone now. I think it's got a little bit more room to go to the downside simply because some of our indicators that we rely on to tell us if a move is over or not is indicating that the sell-off in oil right now, or the correction, is not quite over. If you can see these indicators down here, they're all red. In terms of the long-term look over here on the far right-hand side on the weekly chart, notice here, all right, we're still above a bottom that was created back in the springtime in oil. We don't think that bottom's going to be penetrated, but we do think it's quite normal to see some profit taking after a big surge up. And then we should have a return and make it up to what we think is our target zone here for a Fibonacci extension. In terms of Elliott wave, for those of you that are into Elliott wave, and Elliott wave basically assigns wave swing patterns in the form of numbers and then corrections in alphabets. But this is a 3, this is a 4, and there are 5 waves in a trend. So we don't think we're quite done with oil. The 5th wave will complete this run up. And we're still in the midst of wave 5. So wave 4 to wave 5 is all considered a wave 5 move. And in the markets, things don't go straight up. They zigzag. You have a little bit of movement up, profit taking, a little bit of movement up, profit taking, until you reach the target. And then that becomes the ultimate high. So we're still bullish on USO. If you're thinking about going into it now, I would wait. And this is one of the reasons why we like to look at 3 charts, and this is called multiple time frame analysis, simply because the short-term chart over here is telling us that this pullback is going to make a few more lows before it's done. So hang tight on that, and if you're long on it, make sure you keep that stop way under here. Okay, you have to have that stop way under here around 60. Okay, that will keep you in any profit-taking move to the downside. So that's kind of where it's going there. All right, Jim, I see you coming in here. Good to have you here. Let's take a look at some of Jim's here. We've got UNG. Now, UNG is the ETF for natural gas. So we've looked at oil. So now we're going to look at natural gas. Now, we're bullish on natural gas. Okay. It's got to prove itself a little bit more, but it has come up quite a bit recently. We're kind of waiting for it to clear this top as well. It did clear this top, which put us long, but our stop remains low at this pyramid here. So if you did what we did, and when I recommended this, and you went long when it broke this top, but kept your stop here, you're fine, okay? Just stay with it. If you're looking to get into it now, I think you can do it now as well, because notice the short-term charts here are all bullish. We've had a big move up. Doesn't mean you'll come back a little bit, but I want you to put your stop, if you can, below here or here. So you got two places, 1 or 2 to put your stop. So either here or here. And then, of course, calculate your trade size as well. So UNG, I'm going to put on a buy list. And then the next thing we want to take a look at is where is the minimal target on this? And simply speaking, you know, if we draw a fib retracement on this big move down, all right, I think you've got a significant area of retracement here, and there's 2 of them, okay? There's a super short-term one that you could draw right in here. So we're at 763. So this really conservative retracement would be actually between $13 and $17. So that's almost a double your money right there. If you get a more longer term retracement, then what we can do is move this up a little bit to this level here. Let me just make sure that's an all-time high. So let's just come down a little bit on that pyramid. We could get as high here as $15 to $21. So either way, UNG is a buy. Okay, so good job, Jim, on sticking with that one, because that looks really good. All right, let's take a look at USO. All right, and we did this one already, but I just want to show this one again. Jim, this is the oil ETF once again for you, and we expect this to go further, but we're not recommending it right now because of the bearish 60-minute chart. Okay, so we covered that one already, but I'll just throw it up there so you can see it again. All right, SPY, let's take a look at this one. This is the S&P 500 spider, okay? So this is kind of going to duplicate what we're seeing on the down. And overall, we're very bearish on the markets. Now, we have been for quite some time, but it looks like now it's starting to really come into its own in terms of perhaps entering the next movement of selling. So I put a red line on this weekly chart for the spider, okay, up here, and it anchored on the high. This high was the 2022 high, and notice the market has not broken that. So we think we're in a complex correction here, and we should eventually start to move down. Our target is below the COVID low, so we're thinking at least down to there when this thing starts picking up some steam. Now, it's not going to drop there in a couple of weeks. It's going to zigzag. It's going to take the good part of a year to get down there, but it should start to move. If that particular movement right now we're in is going to pick up steam, then we're in pretty good shape. And notice what we had here. We had that top here. We had the first move down, and this was significant. It couldn't break the high here, which is this high right here, and then sold off. It's going to be interesting to see on the next pull up if it sells off again. If it does, then that's a good sign, all right, that we're on our way down. For those of you that subscribe to many of our market update services, you know we're very bearish on the market. My Dow Jones prediction is between 18,000 and 15,000, probably occurring sometime in late 2024 by the time we get to the bottom. But we should see some selling. I also think real estate's going to go down quite a bit as well. So we're pretty bearish on not only the stock market, but also the housing market as well. So that's kind of where we are there on the overall markets. And that specifically is for the S&P spider. All right, let's keep going here. Let me see what else we got next here. All right, Stuart, let's see what we got here. For you, we've got Ford, F. Let's take a look at Ford. All right, so Ford has kind of been bouncing along. Notice it sold off earlier in 2022, and then it bounced around. But this bottom seems to be holding here. But right now, okay, we're kind of in a situation where we've had a pullback. We kind of expected it to get into this target on the 60-minute chart, which is the short term. So we're kind of looking for some type of rebound pretty soon. What I do want to point out is that one of our indicators on the long-term chart, this weekly chart here, has a green PTF. Now this PTF has a 75% accuracy rate. And basically what it means is that when it's green, find the highest price in the green area, and that would be this high that created it basically. And there's a 75% probability the market will return on the next move up and take that out. So that's showing that any movement down, which we've experienced, is a correction in a continuing trend that should continue to the upside. So this would be kind of like maybe a 3, maybe a 4, or maybe a 5 coming in, or a 1, 2, whatever the impulsive wave count on that is. This high should be taken out. So we're kind of bullish on this, but again, we're still pulling back. So I would hold off on that. But again, have your stop very, very low if you can at the bottom. All right, to see if that bottom holds. If it's not, then you need to get stopped out and leave and try again. Okay, so that's Ford. All right, ZM, let's take a look at that one. All right, so ZM bottoming as well. Okay, again, what I like about ZM, however, is we have some green PTFs. That's that indicator on the intermediate and also the short-term chart. So that PTF is right here, okay? And that's green, so we should get above here, which is above here. So we're kind of looking at pretty short-term is bullish on the PTF, and so is that. But we are coming down. We've got a red owl, so the momentum is down. We got pyramids to the downside on both of those. So at this time, wait, okay, because the PTF won't tell you when it's going to reverse and come up, but it's just telling you eventually this high should be broken. So again, if you're in it already, stop has to be at the bottom. When you're bottom fishing like this, you have to keep your stop at the bottom if you can until it really breaks out. And it hasn't broken out significantly yet. So keep that stop at the bottom. If you're thinking about going in it, don't do it yet, all right, because we have so much red pyramids here. We want to make sure that this bottom holds and see a reversal in the momentum before we go long, okay? So good one, both those are okay, but at this particular time, we are not going to recommend them. All right, let's see, Constance, let's see what you got here. LPX. All right, so LPX also coming down, and it's been coming down for quite some time, okay? Kind of a messy chart. Take a look at the chart in the middle, all right? Fairly messy, and you can see that messiness over here. This is clear. This movement is clear. So the 60-minute chart is showing the tradable chart here. This chart here is kind of messy. Now, it's already gone down a lot, okay? You had nice pyramid entry points here after the gap. So it looks to me also like we're seeing quite a bit of bullish divergence here. That's when the owl momentum indicator is showing a lesser value than it was before, but prices are lower. So when you see that type of funnel shape between prices and the owl, that's called bullish divergence. Now, that means that the downtrend is mature and probably close to ending at some point. You don't want to go short now, it's too late, but you don't want to go long because it's not turned yet. We still got some bearish pyramids that are active on these two time frames. So I would hold off on this until it turns around. Now, if you happen to be long and you're a long-termer on this, hopefully your stop is here. Otherwise, you'd be stopped out on any other type of time frame, okay? So that's it. So don't go into that yet. but we can look at it next week, Constance, if you come, and try to see if we get this thing bottoming, because after it bottoms, then it may, base for a little bit, but then it may be a good trade at some point. Let's take a look at your other one, CCJ. Okay, so CGJ, we looked at it before, and we had a little correction area here it hit. But again, the 60-minute chart, bearish, bearish. So, and bearish here. So it's still bearish short term, and not surprising after a big run up. So what you're in is a profit-taking sequence right now. Will it go higher? Sure. We got a green here and a heavy green here, but we're in a bit of a profit-taking area. So that's kind of where we're at now. How long will this last, this profit taking? Well, let's grab a fib retracement and put it on the actual move up. And okay, so it's got probably one more dip down into it since this is red over here. So this is saying lower lows, okay, which would put it back into the target zone. So when it gets here, all right, we can look at it for a possible buy for another move up, because this is green and this is green. So long term, we're bullish. Short term, we're experiencing profit taking. So you don't want to go in yet, okay? Because I don't think the profit taking is done. So hang tight in that, okay? All right, let's see what else we got here. All right, let's see. Let's take a look. I want to take a look at the housing market real quick. And I'm going to do that through a variety of ETFs in the housing market. ETFs in the housing market, some represent a cross section of residential real estate throughout the U.S., and then some are apartment buildings and commercial. So whenever you look at a ETF for the real estate market, kind of make sure you're looking at the one you want to see. And this is kind of the one for residential mostly. And as you can see, pretty bearish. All right, you had a little bit of a move up here, all right, as the season for buying and selling picked up. And then as soon as that ended, boom, and of course the higher rates and low supply is causing that thing to take a dive. But we still got red here, red here. We may have a little bit of a move up. We're starting to see some green here. So we might see a little bit of a relief here. We'll see. It could pop up to that zone here as shorts cover and then head back down with this remaining red. We're also watching this, very close to going red there. So we're pretty, at this particular point, we're still bearish on the real estate market overall. And, the employment report came out today and it was actually very good, which kind of, is a double-edged sword. Because it's good, that will probably cause the Fed to raise rates once again before the end of the year, another 25 basis points. And because good employment leads to usually more inflated prices, so which they're concerned about the inflation situation. So that's kind of where it's a double-edged sword. So bearish on real estate still. Yeah, we might see a little bit of a spike up for a little bit. But overall bearish at this point. All right, the other one, let's see the other one here. I wanted to take a look at cryptos for a minute as well. I'll start out with GBTC. That seems to be a popular one. It is moving up. You can certainly see, all right, we have a trend going up for the most part. This bar was quite an interesting bar that occurred there, but you're basically seeing a move to the upside on crypto. We think a major bottom was put in here, all right, and it seems to be so far holding well. And there's a lot of space on that weekly chart for this thing to move up. So we had a big move up, big move down, and now we're cycling back to the upside. So overall, we're bullish on crypto. And if the stock market sells off, you might find people not only going into the metals, but into the crypto market as well. So keep that in line. All right. The other one that's popular in crypto is Coinbase. That's COIN. And this one too, again, we're bullish overall. more of a longer term snap, but we're seeing some pullback here and it's not done yet according to the 60-minute chart. So on this one here, probably I'd wait this one out, but if you're long already, just keep that stop under here and you'll be okay, all right? So the other one is Blocktrain mining company, and this one has been pulling back. So cryptos have been pulling back a little bit. I'm not concerned at that pullback because I think this bottom here is a major bottom, and after a move up to see some profit taking is not unusual. So I think we're kind of seeing that. If it develops into something worse, we'll know, but otherwise that's all it is for right now. All right, so the other ones we can take a look at here is TLT. I wanted to look at the bonds. Now TLT is one that has been recommended earlier by many people, and it started coming off the bottom. This PTF kept me from recommending it, thank goodness, because notice how it has rolled back over. PTF was correct, calling for more lows beyond this. We got it, and now it's turned red again. So it's not done coming down. So do not go into the bonds yet. At some point, it will be the buy, a tremendous buy. All right, you definitely want to go into it at some point in the future, but not now. All right, so we're going to watch that. And when it seems to be ready, we'll let you know. But right now, it is not ready. All right, anything else out there? Anybody else? I think I covered them all. Let me know if I missed any of your picks out there. But I think I've got them. Let's take a look at Google. Give that a second to load. All right, so Google on the long-term chart, we think we've got basically a 3, a 4, and we're going up to a high at some point, wave 5. Now, we're probably due for a little bit of a pullback. We're going to see, okay? We want to see if this high here on the daily chart, which is this high here on the weekly chart, gets taken out. So if it does not, and the market sells off again, then this is going to probably develop into a more serious correction within the move up. So here, profit taking and a big move up. So we're just not 100% sure if we're not going to get one more little high before the big profit taking wave comes in, or we're in the infancies of that profit taking and we'll have to wait and see. So because of that, I'm not going to recommend it yet. If you're in it from our earlier recommendations, just have your stop low enough under a good retracement level that this thing could go if you want to stay in it for the long term, okay? So Google overall long term, we're bullish. Short term, again, a little risky because is it better to get in here or is it better to get in here, which is a more risky trade, this one, right? So I don't want to put anybody in at this point, even though I'm bullish long term on Google. Okay. All right, Frank, let's take a look at TWM. TWM. Okay. So TWM has been perking up. You can see it on the daily chart here and also the 60-minute chart. We've also been bottom fishing here for quite some time. So, this is an ETF and it will do well when the market kind of does it, so to speak. All right. So at this particular point, yeah, you can go certainly long on this. We've got no reason in terms of not to. Okay. We've got green here, green here, green here, green here. Yellow neutral is okay. When the PTF is neutral, you can go long or short. So that's okay. That's not a that's not a signal that will keep you from making a trade. When it's green, you only want to go long. When it's red, you only want to go short. So you don't want to go against it, but you're not going against it if it's yellow. So it looks pretty good. Now, you got to have your stop low enough. You got to be at this pyramid here. Do not use this pyramid unless you got in way in here early and you're, have profits on this leg up that you want to take. Otherwise, keep that stop under here and go for the more significant big move which could be quite big, and you could double your money possibly on this, if not more. But it's going to require the market to sell off. Okay, so let's keep an eye on this. I guess I'll go ahead and recommend this and put this TWM on a buy list with a stop at this level here. So you make sure your stop is pretty low on that. Okay, let's just put up the data box here so you can see over here that you need that stop below here. All right, 13.39. Okay. All right, and then what we'd like it to see is to take out this congestion here. Would be really bullish as well. Okay, might get a little pullback here, but because again, if you look at the 60-minute chart, is it better to get in here or here? So we're probably due for a pullback. But if you're looking at this for a long-term trade, I would recommend it. Okay. All right, so that is that one. All right, gold. Yes, let's take a look at gold. All right, so here's gold here. All right, it's coming down. All right, now I'm going to open up the long-term chart because it's important to take a look at this long-term. Okay, and kind of put things in perspective. So in terms of an Elliott wave account on this long-term, this was a 3 that occurred back in 2011. Okay, then it went into a long-term 4, which ended in 2016. And now it's been a wave 5. Now, one of the requirements for wave 5 is to take out the high there, right, on wave 3. So it's done that. And it did it on bearish divergence. So this was higher on the owl than this one. So that's good. This, however, is telling us we're not quite done with wave 5. So wave 5 is still unfolding because if this remains green, then we have one more push to the upside. All right, so I think we're going back into the target for wave 5 again. I don't think the move up is done. Now, notice I have a fib retracement drawn in here on this move up, which represents basically a point of inflection. And so a point of inflection is normal profit taking areas. So this is the target. So we're kind of in that. So I would expect some type of turnaround in gold at some point here. It has been coming down. All right, now I don't expect gold necessarily to go to 300, okay, on this ETF, but probably around 210 to 220 is possible. All right, again, it's still pulling back right now. See the red here? All right, so I would not go into it yet. All right, wait until we make sure this profit taking move to the downside ends before going long. All right, now if you're in gold already and your stop is, below in this area here or below the inflection point, okay. But otherwise, don't go into it right now, okay. All right, now let's take a look at yours, SMCI, see what's cooking on that one. Now we've looked at that one before. All right, so on this one here, we've had a situation, you cannot mistake that we have had a wave 3 on this chart here. Huge, okay? You can see it here too. So huge move up on wave 3. We've had a move down here and we're starting to come back up. So is this a 4 bottom or is this an A wave and this is a B and we're gonna have C? So let's just see first if we've reached a fib retracement zone that makes sense on this chart. And let me draw in a fib to see. All right, so we had a move up here, move down here, move up. So I think probably we can, a long-term fib is here. So we did hit the target zone. That's a good sign, okay? Do we have any red PTFs? No, good there, yellow's okay. And we have a green here, all right? This is still in wave 3. This is 3, this is 4, and this is 5. Now, when we get to the end of 5, then we'll be at the end of wave 3 on the weekly chart. So this to me, we don't have a red owl. This to me is a minor 4 inside a to wave 3. So once we hit wave 5 on the daily chart, we should be good to go. So if you went long here, all right, and you've got pyramids on the 60-minute chart to do that, you could go long here in anticipation of wave 4 on the daily being over. Okay, so you have to put your stop here. Now, why would you get stopped out? Well, sometimes this may be an A instead of a bottom, even though it hit the target. This could be a B, and we could go back and do a C, get stopped out, and then have 5. So that's very possible. But I think it's worth the trade because we hit the target. We had the red owl. We've got the green one now. Let's figure out, make sure we have enough profit target in this to make it worthwhile. So we go to our fib extensions and let's move those up to here, and as you can see, that's a pretty good risk to reward. So the target's 423 to 546. So I'm going to put SMCI on the buy list, and stop's got to go at the bottom. Okay, bottom of the pullback. So we're talking, I've got my data window on the other screen. So that's a low of 228.26. So it's got to be below that. Okay, 228.25. Or if you want to put it even under one of the fib retracements levels here, in case it goes back down, you could do that and lower your trade size. All right, but SMCI out is okay. All right, good. All right, Alan, how are you? Let's take a look at yours. So RIG, R-I-G. All right, RIG could be pulling back a little bit still. All right, so here is kind of an interesting situation. All right, you had a big move up, you had a correction, one more high, 3, 4, 5. This owl here is less than this one. And you see this dotted line? Okay, so the system is only looking back here. So this is indicating we may have a wave 3 inside of wave 5. So you may get one more high on this, but it's very risky. Okay, plus you got a pyramid here. So I don't know if you're long on this one or thinking about it, but if you were long, you would have been stopped out on the pyramids, even on the weekly chart. So I would probably, at this particular point, maybe take a break on this a little bit. Okay. So I think I'm not going to recommend RIG because I think it could be either correcting or starting a new big move down. You got to be careful on that one. All right, GLW. Let's take a look at that one. It's Corning, I think. All right. A little bit of a messy chart on the daily. Okay, clearer on the 60. And let's see if there's any clarity on the weekly chart. A little bit. Okay, we've had a nice move up, but all right, so we got a bearish pyramid here. We do have green here. Bearish, bearish, green, bearish, neutral. Okay, so this to me looks, because this is remaining green. Now we got to watch to make sure these don't change, but if these remain green, then we're looking at this move down as not being too major anymore, that it should be coming to an end and we should get a move back up. All right, now what's interesting about this one, and let me just show you here. Okay, so we had a big move down off the top, right? A, B, C, there it is, boom, okay? So now what I want to do is draw a horizontal line marking the bottom, all right? If prices take out that bottom, that's a big deal, okay? And this is a nail biter. It's close, okay? So we're going to have to wait and see. If that gets taken out, then that just means that we're still in a correction. Because the PTFs are green, especially on the weekly chart, it means it's a correction, not a major change in trend yet. But we will see, okay? Things can change. Indicators can change. So we'll keep an eye on that. But that's not one I'm going to recommend right now. All right? Tesla, TSLA. All right. Tesla, as we looked before, looks to us like possibly here we have one more high coming. But we also have kind of an interesting situation coming in here. We've got, let's see, looks like we got, well, we can just extend this line here. All right, we may have a short-term pennant here. All right, we may have one even more, yeah, pretty much right on the button, okay? So a pennant, what a pennant is in technical analysis is when you have a, draw a straight line hitting the tops of the highs and one hitting the bottoms of the lows. And if you have a wedge type of situation, all right, that wedge looks like a pennant, you know, kind of like a yacht club pennant. Okay, you can put New York Yacht Club right there. Okay, and the idea here is when you get in towards the point of the pennant, prices are compressed, and whichever way they break out, they usually take off in that direction. So this looks to me like we may be getting into a situation where it does that. Now, what causes me a little concern here, all right, is the red PTF on this chart, which indicates we're probably going to go below here. So, and this is red too for here. So that would probably put it below the pennant, right? So I don't think the move down is over. All right, I think on the long-term chart, this is a bottom. This is a 4 bottom, 3, 4. But I think we're still moving down inside wave 5 on the weekly chart, if that makes sense, okay? So I'm not going to recommend this, but it could be good after the move down completes. All right, good. All right, let me know if I missed any. So we got a couple good ones here. All right. Anybody have anybody else? Any more out there? Anything else? All right, I think we're pretty good for today then. All right, so let me just go over which ones I like once again. So let's wrap that up and look at the stock winners for today. All right, first one is UNG. So let's go back and take a quick look at UNG. All right, we like UNG. All right, looks like it's breaking out of a basing bottom. So that looks really good. Okay, that's excellent. We got TWM. Okay, now TWM, all right, is kind of an inverse ETF, right? So if the market continues to do bad, this will go up. Now, I think it's probably due for a pullback, so it's not my most favorite one out of the 3 that we picked, but it certainly is hitting all the boxes. In other words, everything is green and it's moving up. So as long as you put your stop on this one down here, like we talked about before, then you can survive any type of pullback. All right, so that's TWM. All right, and then SMCI was our other pick that we like today. And we're counting on this one as being in a wave 5. And the bottom of wave 4 is in, okay? So if we have our stop under the bottom and get stopped out, we're going to try again. I would recommend trying again on the next big move up. But you can't not go into this because it hit all the boxes. All right, so you don't want to miss it. So 3, 4, and you've got good 2-to-1 risk reward. So this is one you want to hit, okay? So that's okay. And I think probably one more high is possible based on the configuration of this. All right, but again, you know, we can't guarantee it, but that looks fairly good there. Now, like I said, if you get stopped out on this one, then it just means the bottom on this wave 4 is not in yet. And that does not mean that wave 5 is still not going to happen, but you're just going to have to try again, okay? All right, so that's it. Great session today. I'm going to run over and just put things, put some charts up on the intraday time frame, run a little music like I normally do. All right, and keep on a boy. Look at the MES today. Ooh, big run up. Look at that. We could traded that on either the 15-second or the 1-minute time frame. And now we're seeing a little bit of bearish divergence starting to come in, but maybe not. Maybe that will continue up and go even higher. So really nice, okay? And that looks pretty good. The only problem with going into it now, too risky, okay? Is it better to go in here or get in here early? Okay, here, right? Same thing with this. Beautiful trade on this chart here, 15-second. So that would have been a nice one. All right. So I think probably we're going to get a correction on this at some point. And then let's take a look real quick at the M&Q, probably similar. Yeah, M&Q moved nicely up too. Okay. So all good on that. So again, if you're trading at home, don't go into this now. It's too late. Okay. We'll probably get a nice size correction here at some point. Let's see. Let's just draw some fibs in here. We'll draw them in right here on this. Well, I think let's see what we got when I go. Yeah, let's draw them in right here. Okay. I think probably we'll have a pretty decent fib retracement here. So if this goes red, all right, then the retracement's going to be more significant on this time frame than I think it will be on the 60. So the retracement here level at the worst case scenario will be somewhere here. Let's see if that's about the same. Close enough. Okay. But anyway, there it is. Okay. So probably could make one more high before we go into a move down. I won't know until we get a red owl on the 60-minute chart. So we'll see what 15-second chart. So once again, these are intraday time frames. So this is 15 seconds, 1 minute, and 5 minute. These are the charts we use when we day trade in our trading room. Okay, so that is it. All right, so we'll see you back here next week. I'm going to leave this on here, and thank you so much for tuning in today. I'm going to put a little bit of music on, and we'll see you back here next week. All right, have a good one.